Visa recently closed their financial year and published their newest earnings. So let's take a quick look at the results of Visa. Revenue is up by 22%, which is really impressive. Income is up by 21%, and earnings per share are up by 24%. So not only did the revenue went up, but also they had to buy back some of their shares and made the earnings per share even greater. Visa spent over $11.5 billion on share repurchases in 2022. So this is very positive. But we also see some less positive news. Cash and cash equivalents are down by around 800 million, and long-term debt is up by around 300 million. So not everything in these results is great, but let's take a look at the big picture and analyze Visa. First, let's see who owns the company. Individual insiders. That is an X. Individual insiders own only 0.05% of the company. And we want to see a percentage closer to 2%, because then we know that people running the company have their skin in the game. And are they buying right now? That is also an X. We actually can see a lot of sales in the recent months. And what about super investors? That is a check. There are 25 super investors who own Visa, and it is the 5th most owned stock by super investors. And are super investors buying? That is an X. If we combine data from Q2 and the first data that we have from Q3, we see that super investors bought less than 1.2 million shares and sold over 3 million. So let's try to find out why is Visa the 5th most owned stock by super investors. Let's take a look at the financial health of Visa. Return on invested capital. That is a check. It is 19.7. And we are looking for a return higher than 10%. So this is really, really nice. Free cash flow growth. That is a check. It is 15.2%. And just as with return on invested capital, we are looking for a growth of over 10%. Now let's take a look at the net profit margin. It is a check. It is an incredible 51%. And the main competitor, MasterCard, has a net profit margin of 46.5%. And next week we are going to analyze MasterCard, so if you're interested in that, then don't forget to subscribe. So we can see that not only Visa has a slightly better margin than its main competitor, but also that the whole market is extremely profitable. And what about shares buyback? That is a check. In the last 10 years, Visa bought back 23.6% of its shares. And this is really nice. And we saw how that creates value for the shareholder when we were looking at the financial results of Visa for 2022. Their earnings were up by 21%, but the earnings per share were up by 24%. And now let's take a look at the debt of Visa. That is also a check. It would take just over a year for Visa to pay their long-term debt with the current free cash flow. So we can have a pretty good idea why super investors like Visa so much. It is just a great company. And now let's see, is Visa paying a dividend? That is a check. Visa is paying a dividend, and the dividend yield is 0.9%. And now let's take a look at the payout ratio. That is an X. It is 21%. And what we are looking for is a payout ratio between 30 and 50%. But the fact that it is lower is not really a problem. It just means that we could expect a higher dividend. But it is a sustainable one, and it is not slowing the growth of the company in a big way. And the dividend growth? That is a check. It is 17.8% 5-year growth rate. And they are paying dividends since 2008. Just in 2022, they spent over $3.2 billion on dividends. Okay, so we took a quick look at the company, and now let's find the intrinsic value of Visa using a discounted cash flow formula. What we will have to do is to estimate the growth of Visa for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. In the low scenario, we will estimate a growth of 10% for the first 5 years and then 8%. For the medium scenario, 12% and then 10% from year 6 onwards. And in the high scenario, let's estimate a growth rate of 15% for the first 5 years and then 12%. And the intrinsic value is 174 in the low scenario, 203 in the medium, and 247 in the high one. But of course, these are not the prices we should be buying this company for, because we always have to add a margin of safety. I use a 30% margin of safety, which allows me to have a comfortable room for error. So, with a margin of safety, the price per share should be around $122 in the low scenario, $142 in the medium, and $173 in the high one. And the current share price is $196.98. So the recent low of $176 was pretty close to the high scenario with a margin of safety. Visa is a really exceptional company. It has great results, incredible margin, and duopoly with MasterCard. But of course, we can speculate about how much more can Visa grow in the future. What new markets can they find or create? And the last thing is the price. In my opinion, it is a bit too high at the current time. Okay, that's it for today. Thanks for watching. If you found this video interesting, then please do not hesitate and press the like button and subscribe to the channel if you want to see more videos like this one. See you in the next one, and bye bye.